Slow news week. Oh my gosh, slow news week. Welcome to the Beat the Planner experience. Damian Dunn joins me. Two bald men talking about a terrible market. Hi, Dame.
What could possibly be more cliche other than if we had gray hair and both of us had glasses?
I found myself for the first time in a long time watching Jim Cramer melt down last night on his show on CNBC.
There's almost nothing more comforting than a Cramer meltdown.
I agree. Good morning, Andy and Chris and Jen. Let's get the whole crew together. Hello, Big Rick Swank and Dan. Kristen's off today. Dame, yesterday was a good old-fashioned hootenanny in the market, and it occurred to me at 4:05 on Wednesday this week when President Trump announced his tariffs that there was a reason that the press conference was at 4:05.
Yeah.
And then it became evident immediately.
Yeah, the market's had all night to bake that news in and stew in it and wonder and then exact their revenge.
So here's what we're doing on the show this week. We are going to be very market heavy. And oddly enough, even though there's a lot of fear to stoke, we're actually going to do the opposite today. We're going to talk about the natural fears that people have. And Dame, we planned this show well before the meltdown.
Yep.
So we're going to talk about like the excuses people say, things like, I don't trust the market. What if I need the money soon? We're going to go through each of those, and we're going to give you like the logic behind the concern and the answer. Mm-hmm. We're also going to do our stock picks updates at the end of the first quarter between the first and second segment. For all those podcast listeners, which is literally all of you, by the way, hello, Eric, Quincy, Caleb, Boss Hog of Liberty, Rochelle. Dame, as you can tell, I'm doing some different stuff on the podcast. Did you listen to my little spiel yesterday?
No.
I love it.
Sorry.
It's okay. I mean, it's not your job. You know what I mean?
I normally do.
No, it's not. I'm saying it's like not your job.
I was not paying attention to that yesterday. There were a few other things going on.
Oh, I'm sick. Dame, I feel like I had a life news to share with you. But
tornado related?
Oh my gosh. The tornado was like 1.5 miles from my house.
I saw the path on one of the local indie stations, and there were a lot of places that I recognized on that path.
It missed our office by 0.5 mile.
Yeah, not. It was like you told me the power's out, internet's down. And I was like, oh, I think must have hit something. It turns out it almost hit the office.
Yeah, Dame, do you want to talk about the tariffs now or later? I don't necessarily want to talk about them on the radio, not because the radio. I don't know why I don't want to talk about them on the radio. It just feels like we don't have as much leeway for some reason. I'd rather talk about them off. What do you think?
We can. I've got a tariff news story if we want to try and just
that'll be that.
Dump it in there in the news, and then we can try and take it whatever direction you want.
Guys, I'm interested in your thoughts on tariffs. You and I were keyboarding back and forth yesterday with each other a little bit about this, but here's where my brain is right now. And again, just my opinion. Mm-hmm. I think a couple things. If we're legitimately as a country going to stick with the tariffs as the strategy to rebalance trade, it would take 3 to 5 years of the tariffs and of that commitment for it to work. And I don't think this is my opinion, nothing other than that will work. And so all we're going to see is just absolute carnage. Dane, what do you think?
Yeah, macro policy takes a while to enact. We're seeing the quick short-term ramifications of enacting a big macro policy, but the long-term benefits that would arguably be realized from enacting the tariffs are going to take time. 18 months would be the absolute minimum to start seeing some of this, in my opinion, but much closer to the time period you're talking about.
Yeah, I think the question that I believe most people are asking, hello, Tom Danza, good to see you. How long are we actually committed to this strategy, which would be really helpful to know.
Yeah.
because then businesses can react to it. Apple can react to it. GM can react to it, because if I'm Apple, I'm not reshoring jobs if I think the tariffs are going away in 18 months. I'm just not doing it. 0% chance.
Yeah. And part of me wonders if companies will be able to negotiate their own exclusions from some of these tariffs as well. I don't know.
I don't know if I saw a news clip last night of President Trump talking about how he thinks, because of the TikTok thing, that China is going to come to the table as part of the negotiation. No, China just slapped a 34% retaliatory tariff on us, is what they did. And then the market, of course, dove again at open this morning. It is currently down 1,000 points. The Dow is down 1,000 points.
What's 1,000 points between friends?
I was weird humble brag coming. Sometimes I warn you. Sometimes it's just the entire show. Did a news hit this morning for News Nation, and which is I think it used to be WGN. It's
really?
It's like a cable news situation. Okay. Anyway, so I'm on there. And the story before me is the White House, right? Like there's a reporter at the lawn of the White House talking to Marky Martin, who's the host, the anchor of this show. And so as they go to me, it's a 3-shot of Marky, the person at the White House, and me. And it was a very surreal experience that I'm on a panel with someone standing on the grounds of the White House. I've been through some very odd experiences in media in my life. That one, and again, I generally don't care about any of them. That one was a little weird. It kind of hit me a little bit.
Is there any chance that we could get you a press pass to sit in the press room at the White House and ask questions?
Ooh. I mean, there's lesser credible people doing it.
Sure, yeah, but that would be amazing.
I have to say, and I don't know how we got here. Again, I've done a lot of interesting things. None of them I particularly care about, but here's one I think I would care about. I would love to testify in front of Congress.
I'm kind of surprised you haven't.
I won't comment on that, but I'll say, I feel like on some bill, not where I'm in trouble, I have to answer.
The expert. Yeah.
Yeah. But I've always kind of wanted to do that. I don't know why. Part of me thinks it's because scenes from movies, in Iron Man, Tony Stark is there. I don't know why. But anyway, we're off already. That's what we're talking about today.
Yeah.
Dame, I think if I'll speak for myself. I'm going to speak for myself as a consumer and as an investor. That's it. This is not advice. I am mentally preparing for a terrible, terrible, terrible financial year.
Only one?
For now.
Okay.
I'm preparing for there's a 0% chance the tariffs stay in for 3 to 5 years.
Correct.
No way. So they're going to go away. I mean, I don't know. Maybe this is the thing. When do we think they're going to go away? Because to your point, I agree with you. It would take 18 months for us of having them, for us to see a positive sign of something. But the entire other 17 months and 30 days is a nightmare. Nothing good.
I think once one or two countries negotiate the tariffs away or down or whatever it ends up looking like, and they start recognizing serious trade implications, positive trade implications, it'll start to snowball and things will pick up. So I don't know when that first or second one's going to happen, but I think it will grow pretty quickly after that because nobody wants to get left out and lose potential additional trade to a competitor.
As I said on my mini podcast yesterday, which you didn't listen to, that wasn't shade, by the way.
Sorry.
I wish on some level President Trump would just come out, address people, say, look, we're committed to this. I'm asking for a sacrifice. Your sacrifice is your 401k. In a way, you're going to have 18 to 24 months of serious financial pain. We are going to go into a recession. We are going to do it. There's no ifs, ands, or buts. and here's why we're doing it. But unfortunately, we're not getting that. And so, like, the point of my podcast yesterday was like, okay, let's say I agreed with the tariffs, which I don't. But let's say I did. How would I explain them? Like, I wanted to like really deeply understand what is the rationale behind them and not be so cynical that I'm like, they're just dumb or they're evil. It's like, no, that's a ridiculous idea. And by the way, Dame, as you and I've learned, talking about this stuff off the air with each other, it's not at all helpful if you just demonize the point of view you don't agree with without considering what is going on.
Sure. Yeah, communication would be tremendous here. Now, I don't know if there's some angle that's trying to be played by doing it the way it seems like it's always been done by this administration, but knowing that hey, we're trying to reduce spending at the federal level. We're going to try and raise revenue. Some of that's going to be through tariffs. That's going to cause some short-term pain. Long-term, we're going to try and get the federal debt under control. We're going to have balanced budget, and it's going to take some sacrifice. If we can do that for a period of fill in the blank, it's going to leave a country in better shape for generations to come, as long as they maintain certain principles. So if we bite the bullet now, great. And we'll set some foundations for the future, but be upfront with it. Let people have the opportunity to buy in and stand firm on those principles. But there's nothing there.
It's weird because, like, again, I'll speak for myself. I disagree with what the president's tariff plan is, but I would really respect the, hey, prices are going up, and I own that. We're not going to grow as an economy. In fact, we're going into a recession. And we're doing it for 2 years. We're doing it for, I think I could, I don't know, maybe I'm an idiot, Dame, but I feel like that level of candor, as opposed to Vice President Vance last night or this morning saying it could be, the market's not that bad. It could be worse. Quote, it could be worse.
Hold my beer.
Yeah, it's like, I'm not critical of the policy. I just disagree with the policy. I'm critical of the comms because I just think it's so, if you're trying to get people to buy into this, then you have to recruit the people who disagree with you, and you can't do that by gaslighting them.
No. Nope.
I don't even think this is politics. I just think it's leadership. Like, you know what I mean? Like,
there is a leadership component to it. There's failure. The policy could be debated one way or the other, but there is a failure on the leadership side. I will agree with you wholeheartedly on that.
Don't get me started on the Jim Banks elevator thing. I'll lose my mind over that.
Never mind.
Go ahead. Oh, Dame's got a cough. What?
I was going to say clown.
I'm a clown.
Yeah, you're a clown for even asking that.
Like, so for those that don't know, Indiana Congressman Jim Banks, is he a senator? I don't even know who he is.
Senator Banks now.
Oh, great. Well, congrats. Someone said, hey, I just lost my job at Health and Human Services. And he said, paraphrasing, you probably deserve to lose your job. You're a clown. I'm thinking, if someone comes to me and says, hey, I just lost my job, I probably wouldn't hit him with, you probably deserved it and that you're a clown. Maybe I'm so sorry. Definitely we're making some tough choices right now. And I know your family's impacted by that. Hope you land on your feet. Like, is that hard?
It wouldn't be. And he knew he had a limited amount of time to talk to this person. So he could have chosen path A or path B. And he clearly went with path C, which was the worst of all options.
I mean, I was considering this morning on the way in of talking about this, but it's like, I've been involved in situations where someone has lost their job and they, quote unquote, deserve to lose their job. And I quite literally would never say the phrase, well, you deserve to lose your job.
Yeah.
Yeah. I would say, man, I wish you the best. I hope the next chapter is something that you can really enjoy and succeed at.
Sure. Nobody wins with the other comment.
I just don't get it, man. Okay. No one wants to sit and listen to me do this, so we're going to move on. Okay. So here's what we're doing. The market's just a dumpster fire. So all this is going to be is an exercise, like what we're all going to go through now is an exercise in mental strength and fortitude to try to not do something against your own financial interests during this market downturn. There are also new investors who are the Robin Hood type folks or the crypto folks or these people that have gotten into investing through this alternative side door that have never been through anything like this. Mm-hmm. That being said, Dame, as I was going to say this earlier and I got off track about the White House. The market's down, but February 19th to March 23rd of 2020, it was down 34% in those 30 days. So like you ain't seen nothing yet. There is so much further to fall. And I again, not stoking fear. You see the jobs report this morning? I didn't. So that was what my news segment was about. It was supposed to be, predictions were like 138,000 to 140,000 new jobs added in March. Okay. And we've been averaging 168,000 new jobs over the last 12 months. Okay. And so I fully expected to go on the news this morning. The segment starts, the report comes out, and then you react in real time. It's a good time if you like those sort of things. I love it. 228,000 jobs. You're kidding. No. And so I was like, I think I even said, I was like, I didn't think pleasantly surprised was still in my vocabulary, but I'm pleasantly surprised. However, it's a trailing indicator, right? So I don't think you're going to see that next month. Yeah. Caleb Spence, will this type of volatility present a tax loss opportunity? I can't tell if you're serious or not, but yes. Quincy says, my biggest fear isn't even the market down. I'm in for the long haul. It's the loss of so many small businesses that I think will experience our communities over the next year. That's an interesting, I love how I flubbed through that for the podcast audience because I put it on the screen. So I just assumed the podcasters could. They'll figure it out. Dame, that's an interesting perspective of like, is this period of time, again, you got to separate the market and the economy. They're related, but they're not the same thing. Market gets crushed. Tariffs create, buying cycle challenges and a lack of growth. When you think about this, do you think about just small businesses getting wiped out? I think the type of small business is going to be the determining factor on that. I think some of the service businesses won't have too much of an issue, but some of the retailers will probably continue to struggle even more than they have in the past. I also think this is not a fully formed thought, as though anything I ever say is a fully formed thought, but I do get this sense, once again, like I did in the pandemic, our times are going to call for extraordinary decisions for households. Mm-hmm. Like you must act differently. And there's just no way around it. It's like, oh, but we can't go on vacation. It least of your problems. Yeah. Like get some rollerblades, bro. Right? Like it's definitely some knee pads. Yeah. You're gonna need them. I think we're heading to a really bad time. It's going to be tough 2025. I feel like on some level, this show has to evolve with that, right? I mean, maybe today's the crossover episode and we don't want to get people down. Like our goal is to like, okay, so what do we do? Neat. I'll stick, my investments aren't going to move. I mean, they're going to go down, but I'm not going to remove them from the market. But what do we do with everything else? We're back to March of 2020. That's where we are. Yeah. And I don't remember who said they were in for the long haul, but if you're in for the long haul, it's still going to stink. But if you got time, it's a blip, a rather big blip, but it's just something we're going to have to weather. And chances are it won't be the last time that we experience volatility like this. Boss Hog of Liberty, Jeremiah, says, we have been through 2008. We will survive this lame duck in the McKinley era policies. I did have this thought last week that, like, let's say this wasn't a one term to this is theoretically the final Trump term. Let's say it wasn't. Let's say it's a presidency in which they could run two terms. You could arguably get away with this tariff stuff. Arguably, you could say, look, hey, we're going to start off on a rough foot. By the end of my second term, at least give me, like, you could see that playing out. But anything that's going to take hold, he'll theoretically be out of the White House and can't stick to it. And there'll be so much pain that people will have to pull up the plane from crashing, and then we change our trajectory.
Yeah, I mean,
in a vacuum.
At this point, I mean, the chances that at least one of the houses doesn't flip at midterms is, I mean, incredibly small. And so I think this is it. There's a very limited time where it'll just be carte blanche to pretty much do whatever they want until 2026. Is that what? Yeah, 26. So we'll see.
John asks, so now what for those retiring in 5 years or less? I think I have to say, John, and Dame, I've known you long enough and you've been in this business long enough. That's where your brain has been this entire week too.
Yeah. I mean, it's really, really challenging for people who either just retired. I mean, Pete, can you imagine?
No. I'm smiling and kind of giggling because I'm so uncomfortable.
Yeah.
Just the question of, can you imagine if December 31st, you rang in the new year with your gold watch and your cake party, and we're like, I'm done with this, and then your portfolio gets just hammered to start your retirement. And that, oddly, though, here's the thing, Dane. I don't know how let's say someone's in a 60-40 portfolio or whatever, which is sort of out of fashion, but anyway, the market's down 11% so far this year. At this point, at this pace, at this point, I think we're heading towards a minus 30.
Maybe. I don't know. I mean, I don't think it's out of the realm of reason that's on the table, but I don't know. I mean, if you would have, midway through, what was it, February of 2020, would you have thought that we were going to rocket back for a positive return?
No, I've said that a million times. So March 23rd, that's the bottom, right, of 2020. On average, in a bear market, which we were in because it dipped below 20% of the high, it's 4.2 years to recover. Okay. And then it recovered in 2020 in 148 days.
Yeah.
Now, we laugh about this all the time. And again, we laugh because we don't want to cry. Every situation's different. That was a global pandemic. What's a trade war? Is a trade war more likely to see a 4-year recovery, or is it more likely to see a 148-day recovery?
I mean, like, all of these roadblocks are completely man-made, and they could be unwound really quickly. Now, that doesn't take away the instability in the market, the unsureness of the markets, or the political environment that the markets are going to sense, and they're going to be really volatile. But it doesn't mean we couldn't recapture a lot of the losses that we'll have already experienced and will likely continue to experience for the rest of this year. So could we go down 30%? Yep, absolutely could. Could we end up down just a little? Yeah, I fully believe that's possible too. I don't know if we'll have a positive year this year, but I think anything from a small gain to a 30% decrease is on the table.
What I can promise for this show, and we need to get into the radio now that we're 25 minutes in and we haven't started a radio. Oh no. What I can promise in this show is, like, we're going to talk about this stuff, but we're not going to demonize entities we disagree with, because it's just not helpful. Damon, again, I don't watch a lot of CNBC these days because it's just not my jam, but I watched yesterday, as I said to you in Slack. It was oddly refreshing to just hear the economics of it and not hear the politics of it, right? And that was so great.
Yeah. And you told me that, and I kind of kicked myself for not turning it on. Of course, I promptly went and didn't go turn it on because it was almost the closing bell at that point. But it'll probably make an appearance on my TV today, because I'm always up for a little bit of more nuanced discussion rather than just people yelling at each other.
Financial industry legend Brian Brashaw comments, that's a great question. Is this a fundamental break in the system like 2008, or an ego contest that can be reversed next week? Can this, I don't know, we have to start the show. Can this be undone in a week?
I mean, theoretically, yeah, it could all be done by lunch. Now, like I said, that doesn't mean that the markets will see that as a stable environment and that we'll recoup all of those losses immediately. But if we could get communication, have this unwound, um, I I think there's reason to think that we could have a better environment pretty quickly.
Uh, John wants us to get to our stock picks. We're doing it. We're doing it.
We will.
Okay, we got to start. I got to, Dane. We're gonna have. What have we done?
Yeah, we've done we're going to do a podcast and a half today, essentially.
I posted 2 podcasts yesterday.
Of your little Pete thinks or Pete?
Yeah, I did one in the morning that was planned, and then I did an emergency pod when all hell broke loose.
Good for you.
Maybe I'm a narcissist. 2 things can be true, as Molly says. All right. Oh.
Alert. It's time for a radio segment.
This week on the Pete the Planner Show, man, we're going to talk about the stock market. Here's the thing. This has been a horrible, horrible week in the economy and in the stock market and central Indiana if you hate tornadoes. But this week on the show, we are going to talk about what's going on, but more importantly, the fear. We're going to talk about the fear that comes in moments like this. And oddly enough, Dame, by the way, hello, Dame.
Hello, Pete.
Kristen's off this week. Dame, we talked about, even before this week happened, this was going to be the topic for the show of why fear gets in the way of investing. And then we had one of the worst weeks ever. So this entire show is dedicated to fear. I will note, Dame, you've been in the financial business a very long time, and as have I. Most financial decisions, whether it's financial products being purchased or financial planning being accomplished, are driven by the bumpers of fear or greed.
Sure.
Right?
Yeah, absolutely. I mean, you talk to people all the time about either trying to, save as much as they can to prepare for retirement and maybe even retire early. Then you also have the conversations with people like, I don't want to lose anything. I lose sleep at night. In fact, that's what I do lose, worrying about my portfolio balances going down. And is there anything you can do to help me? And so you very often talk to the far ends of the bell curve in this conversation.
Even look at the tariff decisions that were made this week. There's an interesting fine line between fear and greed there. President Trump notes that he is fearful that our economy is too dependent on other countries, which compromises us long term. So that is a fear. Or the other way you could look at that is it greed that we want trade surpluses with all of the people that we trade with,
That's a huge macroeconomic question that I don't think either of us are particularly qualified to answer, but it's a really, really reasonable question. Is that I don't think anybody that listens to this would be against having more jobs domestically. That's just good policy. And if we can be more self-reliant on things that are produced inside of our country, again, great. But there's a big benefit to being able to trade with your neighbors and other folks that live on this planet.
So, Dave, I'm going to hit you with some common phrases that you and I have heard over the years from people who are getting their head around investing. As we noted before the show, there's a whole new population, we'll call them Gen Z population, generation, who have come into investing in a very strange angle. Mm-hmm. Strange in that it's different, not that it's bad. You came through Robinhood, you came through meme and Reddit investing or cryptocurrency. So you haven't really been in one of these yet. And so we just want to walk through. So, Dane, one of the things we hear all the time, common fear, I don't want to lose everything.
Yeah.
So, Dane, when you hear that, like, what would it actually take to lose everything? Because there are a couple scenarios in which you would lose everything.
Yeah. The easiest one to point to is if you put everything, all of your eggs into one basket. If you say, I'm going to put everything into Enron, Gen Z, you don't know what that is, probably.
Big Lots.
Big Lots. There you go. Potentially Vera Bradley.
Hooters.
Yeah. So if you pick a company and they go out of business, you lost your money. That is why it's so important when we talk about diversification and allocation and making sure that all the other components are there of a solid risk profile and then investment strategy. make sure those are in place. And the chances of you losing everything at that point, very, very slim. However, doesn't mean you won't lose money.
I think there are 3 very real examples of what to avoid here. Number 1, let's say you're working and your employer has a 401k and the company stock can be within the 401k, and you decide you're like, wow, I love my company, it's performing well. I'm going to have my entire retirement fund be the stock for the company that I am employed by. That's just an awful, awful, awful idea. And if it works out for you, it was by mere luck, not genius. So that's a bad thing. Dame number 2 is if you're a meme investor and you get into these like GameStop and AMC, when the bottom falls out of those things, and that's going to be problematic for you. And really the third one, sort of along the same lines, is if crypto's worked well for you, neat, but it needs to be a percentage of your portfolio, a small pie piece, not your entire portfolio. And unfortunately, I feel like so many people are really top heavy in investments like that.
Yeah, I think, Pete, you've probably been asked a million times, or it's been accused many times. Somebody says, well, investing is just gambling. If you do it that way, yeah, you're gambling on the future of the company. If you are well diversified and allocated, that's where investing comes in, because you can afford to take losses. You can miss really big on a couple things, but if you've got your money in all over different places, a loss or two is not going to hurt you at that point. But if you have every penny you've got in meme crypto over the month, yeah, there's a good chance that you're going to lose a lot, if not everything.
You know what's interesting is, let's say I have 95% core equities, normal stocks and things, and 5% crypto. I'm not gambling. If someone has 95% crypto and 5% core equities, they are gambling. We have the same investments, but the allocations are different. They're flipped, but one is actually gambling and the other one is not gambling.
But what if they have like a dozen different coins in crypto, Pete? Is that? Of course, that's still a problem, folks.
I missed my chance. Now I look as a, I don't want to call myself an expert investor, but I've been doing it a while, and but I would never call myself an expert investor. I've actually felt this way.
Really?
Yeah. I mean, in a micro sense, like, bad, like crypto.
Yeah. Okay. So you feel like you missed your chance, I'm going to guess, with like specific companies,
as opposed to the timing of my own life, which is really what we're trying to get at here.
Yeah. Sure. I mean, you and I have both had those moments in the past, I'm sure, where you're like, oh man, if I just would have gone on that hunch I had and put whatever money into that company, I would have been, would have made a ton of money. Or if I just would have stuck with it a little bit longer. You're going to have those, but that's not the point. If you're investing to hit home runs, I would advise you to take a step back and reevaluate your strategy. That's not the best way, in my opinion, to have a long-term, successful, less nausea-inducing experience.
Let me hit this one, and maybe this goes into the next segment, but I don't trust the market. And oftentimes, Damon, you and I will hear, I don't trust 401ks. You'll hear people say stuff like that. I was on Grant Cardone's show once. Grant Cardone, he's a real estate guy. Cardone Capital. That's pretty good, Grant Cardone. And we're sitting there. I don't know if it was on air. I think it was on air. I was sitting in his studio in Miami, and he's like, "You trust 401ks?" I was like, "Yeah." He's like, "Why? They're a ripoff." I'm like, I just don't think you understand them. And so, Dame, I think sometimes when people say I don't trust the market or they don't trust a 401k, I think it's just a lack of comprehension. And I mean that as respectfully as I can.
Sure. You and I have talked to a lot of people over the course of our careers, and people have all sorts of assumptions and what they perceive as the truth when it comes to investing, whether that's the investments themselves or where those investments are held, 401ks, for example. And hopefully with a little bit of conversation, you can clear some of those things up and make them feel a little bit more comfortable what's going on.
All right, let's do this. Let's take a break. Let's stick with these. I like these. We've got a few more left. This entire show is dedicated to, what am I calling this? The horrible, terrible, no good, very bad week that was the market. All that's right here on the Pete the Planner Show. I got Damian Dunn here with me, Kristen on vacation, and I am Peter Dunn. We'll be back right after this with more of What If You're Scared? How should you act next? Right here on the Pete the Planner Show. Last week I had some good outros. That one, not good. And it's a fine line because they're just words.
Yeah, it was fine. It got people to Mellencamp. That's all they care about.
Eric with a really interesting point on the mistiming, Dame. As a millennial, that's how he feels about housing sometimes. Dude, I 100% resonates with me. Not because I went through it, because I came into the workplace in the year 2000. I was able to get in and get housing, but I feel you.
And even worse, I don't have a good answer for him.
Yeah. Dame, let's crank through the stock picks. Unfortunately, we don't have time to giggle and point. All right. So every year, those that don't know, we make stock picks at the beginning of the year. We pick what we believe to be the best performing stock of the year. Then we pick what we believe will be the worst performing stock of the year. Then we make a guess on what we think the S&P 500 does for the year. Of course, the pickers are Dame, Kristen, and myself. Dame, let's fly through these. What do we got?
Pete, was your winner ConocoPhillips?
ConocoPhillips was my winner.
Okay, they are down 11.8% for the year.
Okay, well, let's see how they're doing in relation to the other best picks.
Kristen, her winner is down. It was a Flutter, which was these holding company for some gambling, online gambling sites. Down 19.95% for the year.
Okay.
You remember I took a swing at Vera Bradley, thinking that they were having some issues, but they were suggested to sell. There was going to be a buyout, and I was going to make some profit off of that. They're down 51% for the year. That's 51% for the year.
So I'm winning with minus 11%. By the way, I'm still sticking with my pick. I think ConocoPhillips could be fine. Now, oil prices are getting handed.
Yeah.
Some things.
OPEC's cranking up production by a lot. So, yeah, oil prices are going to go down.
President Trump just said that China, quote unquote, panicked with their response to tariffs. Okay. Again, I'm trying to.
Okay.
If someone just does what you did to them, how's that panic?
The losers for the year.
All of us.
Yes. Pete, you picked GM, down 17.76%. Kristen picked Sirius XM, down 12.3%. I picked a company that does solar panels. I can't even remember their name, honestly, at this point. Down 1.7%. It was up almost 10% as of 2 days ago.
I'm winning both.
You're winning both.
You guys, I hope you're wearing insulated shoes because hell just froze over.
Now I am winning the S&P 500 prediction.
Okay, so what was yours? Your pick?
8. You did 11. Kristen did 12.
Oh, you're gonna win that because there's no coming back.
Yeah. So I've got one locked in essentially.
You know, the weird thing is when we have a huge down year, which we have them. Well, we had one in 2022, didn't we? Yeah. In the S&P 500. Rarely does it feel like this, like you know what's coming for the next 9 months. I guess that's the nature of a trade war. Usually you get to the end of the year like, wow, I lost 22%. But like now we're only down. Oh, what are we down right now for the year? And real time, 10:39 a.m. Eastern time, we're down 11.75, right? So, I mean, that's not, oh boy. That's not that bad.
Careful.
It's not that bad.
It's not.
Could be worse.
If you've got a well-diversified portfolio.
In 3, yeah, just go. We're so far behind.
I know.
3, 2, 1. Back on the Pete the Planner Show talking Fear, not the movie that starred Mark Wahlberg.
Oh, yeah.
That was a great movie, Dame.
I don't know if I ever saw it, but I remember the movie now.
Marky Mark.
Yeah.
He's It's a terrifying movie if you have a teen daughter. Okay. So don't watch it, and don't actually have LJ watch it either. Okay. Dame, fear, market, bad. Okay. So sometimes we hear questions around fear and they take different forms. And we already talked in the first segment, things like, I don't want to lose everything. I miss my chance. I don't trust the market. Dame, how about a nice, plain and simple, I don't know what I'm doing? Like, what do you do when someone says, I don't invest because I just don't know what I'm doing? Is that a reasonable excuse? Is that prudent to not do anything if you don't know what you're doing?
I mean, if they're talking to me, they're going to know what to do pretty short order. But no, if somebody comes and says, I don't know what I'm doing, if it's a huge fear, I mean, the chances are they're very uncomfortable taking any kind of financial risk in general. And they're going to need to be coached along a little bit, explained a few things. Now, if they don't have access to somebody like a financial professional that can show them the ins and the outs, even through work, that might be a place where you can get access to somebody who might be helping with a 401k or 403b or whatever retirement plan is available. Man, I'd like to say go out and research on the internet, but you can get yourself into some really big trouble, can't you?
I think that, I mean, this is, maybe I'm nuts. I'm definitely nuts. And this is way influenced by the last 25 years of my life. I think one of the best ways to learn about investing is through your employer's 401k.
Yeah.
I don't want to call it dummy proof because it's not, but it's pretty easy to do it right there. And then if you just have someone explain a couple things to you, you're off and running. The journey on your own to just start day trading from the jump is generally a bad idea. That being said, that's exactly how I started investing in the 90s.
And look at you now.
Dame, how about when people say, but what if I need the money soon?
Sure. If you need the money soon, we're going to have to talk about the different kind of options that you've got as far as investing. Maybe investing is really not right for you for that money that you need soon. We talk about risk tolerance and time horizon being two really big concepts in the financial industry, or at least for the personal investor. If you need that money soon, you don't want to expose it to risk. You may want some return, but you have to understand, to get return, you have to assume risk in that equation. And if you need the money soon, you're better off just using probably a high yield savings account, getting a few percent while that money is parked there, and then sleeping well that money is going to be there and available when you need it.
Damn, it just occurred to me as you're going through that, I got a pit in my stomach.
Oh,
there are people out there who were hoping to buy a home this spring, the first home, move from an apartment into a home, and they had their down payment invested as opposed to saved. I'm not playing in the world of semantics, but there's a pretty big difference between invest and save. Dame, right? This has happened. There are people currently don't have their down payment money based on the market.
Absolutely. I've had multiple of conversations just like this in the last 6 months with people who contact your money line. And we talk about, okay, great. You've got home purchase as a goal for the next year. Where's that down payment? Well, I've got it in a shoebox. Okay, well, at least you know where it's going to be. But maybe we need to get a little bit of interest in the meantime. We talk about high yield savings accounts. Now, if they tell me it's in a brokerage account, still not the end of the world. Where is it in the brokerage account? It's in a money market fund. Okay, I can live with that. I can deal with that. But if they tell me, well, it's in Alphabet, boy, might not be your best. I mean, sure, look over the long term, probably is going to play out for you. But 12 months is a really short period of time when it comes to the market. Heck, 2 days is a really short period of time when it comes to the market, as we're all finding out. So you got to make sure that your money is positioned in a vehicle that's appropriate for its cause. If it's going to be short-term use, man, don't take a bunch of risk. Try and keep it as safe as possible.
I'll start after I pay off my debt, or I'll start investing after I buy a house, or you know what? I'll start investing after I get a raise or change jobs. Dame, is this a prioritization issue? Is this fear masked as prioritization? Because any moment after a moment is theoretically arbitrary. So what's happening when you hear that?
Sure. I think that's a great window to having a deeper conversation, to talk to somebody about, okay, what's going on in your life? What are the priorities that you've got? Tell me a little bit about maybe some short, mid, and long-term financial goals. And if they tell me that retirement is in one of those long-term financial goals, even if they don't tell me that, you start to have that conversation about, okay, let me tell you about what it's going to take to get there. And if you keep kicking this decision down the road and delay, it's going to cost you way more per month to make that happen, rather than if you start with a small amount now. Just get the match in your employer plan if that's all you can. If you can't even do that, get part of the match, but at least start to build that habit and make sure that is ingrained into your normal monthly cash flow situation, to where that when you accomplish this other goal, then you can take some of that money and put it in towards long-term savings goals, or whatever you're trying to chase with those dollars. But open the conversation, make sure that they understand the consequences of delaying that decision, and then hopefully you can get them off the fence and into investing.
How about a final one we'll hit here in this segment? Everyone else seems to know what they're doing, and so I'll look stupid. So I don't want to invest. I'm fearful of being embarrassed. Pretty common. I think back to some conversations I've had over the years. Like, that's not that unusual.
Do you think, and we can answer the question, but do you think that this is more prevalent with younger generations now than older generations because everything is on social media at this point? Or
that's a great question. I would think the opposite, man.
I was gonna say, or do you think it's because it's more prevalent with us because we were raised, you don't talk about this sort of thing?
So, story time. Back when I was a financial advisor, let's go back. I believe this was probably, when was Brett Favre's return from his dad's death? He was playing against the Raiders on Monday Night Football and threw like 5 touchdowns. The reason I remember this is insane. Anyway, we had some friends, and they asked me to help them with their investing. So I helped them with their investing. Both made incredible money, and both were relatively educated, like smart. And I love that I just explained educated by saying smart. Like, Dave, they were educated. In other words, they were smart. Do you understand that?
I think so.
Someone's not smart. One of the people within the couple could not get past this of, everyone seems like I don't want to make a mistake. This person was a perfectionist, and so they didn't want to get off the porch and start investing because and I'm like, well, theoretically, that's why I'm here, to help you, assist you with that. I just can't do it. I mean, I don't even think it was a risk tolerance thing, but it's sort of masked as a risk tolerance.
Yeah.
But it was like the manifestation of perfectionism or something. It was very unusual.
Yeah, and we have a tendency to think that this is a way more complicated thing than it has to be. You don't have to have a complicated investing strategy to have a very successful investing strategy. So learn some basics, set up some consistency, and chances are you're going to turn out to be just fine.
All right, let's do this. We're coming back. Was this the second segment of the show?
Yes.
Oh my God. Coming back after the break. More on risk, what to do. And then ultimately, we're going to do something called the 15-minute investor. How to start investing without screwing it up. All that's next right here on the Pete the Planner Show. I'm Pete the Planner. Dean, what are we doing?
I don't know.
Kristen's not here for 1 second. And
I really hope she's not watching.
Dame, will you listen to the podcast I put out, the second one I put out yesterday, the emergency pod?
Sure.
I'm curious, in a private sense, text me. I'm just curious. I value your perspective on most things as much as anybody. I'm curious as to what you think. It's in the vein of, just say we're going to go through a recession.
Yeah.
Like, it would, if the long game is to really reverse the trade surplus situation, just do that, because it shows you're committed.
Yeah, I mean, You know me. I've talked about the frustration with government kicking the can down the road on big decisions for a long time. And then you feel like somebody might actually be doing something, and then there's zero communication about why or what the benefits of this could potentially be or what to expect in the short term. And somebody has to stand up and be the adult in the room, rip the Band-Aid off and say, this is why we're doing it. It's going to suck, but here's the outcome.
All right, we got to get going because market is now down 1,700 points for the Dow. That's 4.2%. And then S&P, NASDAQ, and the Russell 2000 are all down about 6%.
Good time to buy.
Danza says, tell me Pete doesn't have an obligation after the show without telling me Pete doesn't have an obligation after the show. Let me tell you about the rest of my day. I'm going to eat some lunch. Going to edit the show, put it up. Then I have to write my weekly board email. So I don't know I didn't want to say anything after that. I didn't know how to react. It's a fun communication. It's key.
It's key.
Communicate.
I will.
I don't know what I'm doing. 3, 2, 1. Back on the Pete the Planner show. Tough week in the market if you're not an animal or inanimate object. I mean, I guess animals theoretically would have suffered too because they would get lesser quality dog food or cat chow.
Yeah. Yeah.
Right?
Yeah. Sure.
You have animals in your house?
More? Yes, I do. I almost said something I probably would regret. How
many do you have in your possession? Do you possess animals? Does one possess animals?
I don't think so.
How many animals are in your responsibility right now?
4.
Okay. And what are they?
1 dog and 3 cats.
What are the cats' names?
We have Pete, which is short for Petunia. That was not we thought it was a boy, so they named it Pete. Turned out it was a girl, so we just stretched that into Petunia, but still call it Pete.
Same problem here.
Yeah. And we have Squawk. Story behind why we named it that, but for another time. And then Mrs. Norris.
That's a great name. Are you a secret cat guy?
No.
Okay. I didn't think so.
No, there's a story on how we got all of those cats, maybe for another show, not today.
Dame. Talking fear. Market is terrible. The one element of this, which is the ultimate get out of jail free card when you talk about risk, is time when leveraged appropriately. That's why when all this stuff went down this week, and we said it earlier in the show, your brain and my brain immediately turned to the people who just retired or were about to retire because their margin for error is nil. But despite the fact that you and I are both bald and look really old, we got a lot of time left. And so are we really experiencing outsized risk right now? And I would say we probably aren't.
No, I mean, I thought about checking my investments yesterday just out of sheer curiosity to see how much some of them went down.
Let's do that on the air right now.
You want to do it? All right.
I'm looking at mine. This is called Host Check Portfolios on the Air. No, that can't be right. I don't think this is right because this is the same balance it was yesterday at close, and the market's down 1,500 right now. So Dame is guffawing in his. It's not good. Dame's like, I gotta go.
Yeah, I know it was. It's not an insignificant loss, but that's paper loss. I mean, it's.
But here's where I think people's brains should go during this. Isn't just market volatility. Like we've got some economic crisis going on right now. People's brains shouldn't go to their investments unless you're about to retire.
Yeah.
Your brain should go to, like I said earlier, I think people have got to change their daily consumer habits because if they don't, they're going to get affected by all of this.
Sure. Yeah. I mean, the investments are a big portion of somebody's long-term financial plan, potentially midterm and short-term financial plan. But so much of your daily choices, month to week to week, month to month choices are going to have such an impact on how you experience periods like these. That um, keep investing if you absolutely can, but start to figure out where you might have some margin or opportunity for margin in your day-to-day finances. And if you haven't taken a really hard look at where those dollars are going in a while, it's a great time to do it. Arguably, last week would have been a better time, but if you haven't done it, sit down, look at some spending statements, figure out where those dollars are going. Maybe you find some surprises in there that you think, oh gosh, that's going to be easy. And you can give yourself a little bit of breathing room without too much effort.
I feel like I need to say this because it's facts. 2/3 of our economy is based on consumerism, right? And so this idea that what the best thing for an individual household to do is probably to reduce spending significantly, it makes all of this worse. This is an age-old thing, dude. Like this was the pandemic.
Sure.
You gotta stay in the game by not having the same consumer habits you have during times like these. But when you do it, theoretically exacerbates the market.
I had another conversation with somebody not that long ago where they were going to have to make some pretty drastic changes based on a couple different things that were going on in their lives. And we finally settled on that individual, that family, working up 3 different budgets. One normal time, just normal, figure this out. One that's going to be about a 10% reduction from normal spending, not really caring where you're going to find those dollars, but it would have 10% less outflow on a monthly basis. And then a PB&J or ramen budget where it's just everything is cut back as much as you possibly can to try and, weather whatever you're in at that point. And I thought, for during that conversation, man, this is actually a pretty great concept for this family. I'm wondering if maybe there's not a little bit of pre-planning that the average family can't go through just to be able to say, you know what, I already got a plan for that. I already know where this is going to happen.
As you were telling me that story, my brain went there as well. It's like, okay, what if you were able to just name the dollars that you were theoretically able to cut?
Yeah.
If you needed to cut them, like what is the amount? And I would guess most people, including myself, don't know that amount. Do you know the dollar amount that you could cut if you wanted to cut?
No, I don't.
Do you know the top couple categories?
I mean, it depends on how much we're gonna have to pull back. I mean, because we kick around youth athletics all the time, but there's a pretty significant dollar spend there, and then all the things that come around with that. Dining out, and travel and entertainment. So there's a few things that could potentially get cut out pretty quickly for some significant savings. But if it was just playing around the edges, trying to find a few dollars,
Food.
yeah, food is going to be the first one. And is for 98% of the people that listen to this show. Food and entertainment are going to be the two that are going to get the axe.
Yeah, I'm with you. Again, we've been talking this entire show. We talked pre-show about like what is to come. Again, not fear mongering, just like not our first rodeo. We got some bad economic times on the horizon here. So it's going to require different action. Dame, I feel like maybe you and I have an opportunity to create some ideas around this, some structure.
Sure.
Just now I want to go home and figure out what I could not spend and then just hold that over everybody's head. Hey, recession. We are not getting haircuts.
Well, that'll impact one of you.
Yeah, I know. All right, Dame, 15-minute investment plan. What is this? Why are we doing it? We've talked a lot about risk today. We're calling this the 15-minute investor, how to start without screwing up. I think it has to do with this idea that there should be no pressure to actually make stock picks.
Sure.
And then it's really about diversified investing And what I get worried about, we've got this May, a whole new crop of graduates coming out into the workplace. Are they feeling like they need to pick stocks, or do they know just pick ETFs? Do they know this?
I'm not going to hazard a guess on that, honestly. But if you can go into a situation where if you sit down with your employer plan, you've got default investment, which is almost certainly target date fund at that point. Is it the perfect solution? Maybe at this point of your life, it is. If you don't know what you're doing, target date fund is great. Get some cash going in there on a regular, consistent basis. Fantastic. And then you can start learning as you go. ETFs, then you can start being a little bit more strategic with where those dollars are going. If you're picking index-based ETFs, and then if you want to start playing in the margins with individual equities, you can, or mutual funds. But you don't have to have a ton of market knowledge to be a successful investor. Absolutely don't.
It just occurred to me how advantaged it is for people to have parents that know what they're doing.
Sure.
I mean, it's a massive advantage. All right, Dame, let's do this. Let's take a break. Let's calm down. You calm down.
Yeah, sorry.
We'll come back with biggest waste of money of the week and the news. That's right here on the Pete the Planner Show. I'm Pete the Planner. Is it like Tuesday?
Maybe. All I know is I'm going to win biggest waste of money of the week this week.
That's true.
It's been a while, so I'm feeling pretty good about it.
Let's go. My stomach's growling. This is a great biggest waste of money of the week. Okay, let me get you ready here. In 3, 2. This week's biggest waste of money of the week, right here on the Pete the Planner Show, is the American-made lawn chair, proudly made in the USA. This lawn chair recalls classic designs of the 1950s with modern proportions. The aluminum-framed webbed seat folding lawn chair is an American classic created after World War II. Their popularity eventually waned, with camping chairs taking their place. This modern version is a callback to those classic chairs with better craftsmanship than most foreign-made imitators.
Time out.
Grant.
Almost killed Dame. Like, I don't write the copy. Like I love that we're in this trade war, and the copy on this is like, that's why chairs need to be American made. Anyway, time back in. This modern version is a callback to those classic chairs with better craftsmanship. And this is the magnum-sized chair, so your dad bod doesn't have to cram itself into a soccer mom-sized chair. Boy, gender's involved here. This is who wrote this?
Great.
The frame is made from lightweight, rust-resistant aluminum paired with durable, weather-resistant webbing and a slightly wider seat for greater comfort. The folding design is stackable, easily hung for storage, and portable, and promises years of summertime enjoyment. Dame, man, we had these chairs when I was a kid, but they were in ugly colors.
Oh, yes. I mean, this is just flooding memories back into my mind. I'm going to go with, what's the Magna? It's $65.
Oh, $75 for this chair that when you were a kid and you sat in this, I mean, you didn't really think about it, but you would have sworn it was like $5.
Yeah. Oh, yeah.
I knew when we got into some of that copy that this was going to be obnoxiously priced.
Yeah, I was close. I feel like that would have been a really good guess, even if Kristen would have guessed first.
Dame, what's in the news this week?
Well, let's lean into it. In a Rose Garden speech anticipated with a level of hype usually reserved for a Supreme collab drop, President Trump flipped the economic status quo that has existed for decades on its head with the announcement of a minimum 10% tariff on all exporters to the U.S., plus higher reciprocal rates on countries he said maintain unfair trade barriers for American products. Quote, reciprocal. That means they do it to us, we do it to them. Very simple, Trump said. Though the reciprocity won't be exact, the president said the U.S. would be imposing only half of what other countries levy on U.S. imports. But that figure being halved would include, quote, the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. Holding up an extremely memeable chart with a list of countries and their tariff rates on U.S. goods, the president addressed some of the most significant new rates scheduled to kick in at midnight on April 9th. They include 34% on China, but there's also a 20% tariff before that, so that takes us up to 54. Japan 24, Vietnam 46, EU 20, and then Mexico and Canada were already hit with 25% tariffs, and they won't be getting additional ones yet.
Also, I don't know if you noted that during that announcement and those numbers, and you showed the trade deficit, that it was for goods only and not services.
I didn't notice that.
Yeah, the administration did not include services within the trade deficit that they were showing. And in many cases, it would have flipped because American services and service companies are exporting services, not just products.
Yeah. So there we are. We're in Tariff-ageddon right now.
Dame, do you want to get into predictions? The answer is yes.
Yeah, I would say yes and. Yeah.
Okay. When does the armor crack? And by the way, the armor is broken on the floor and on fire. But when do the first tariffs start to lift because of whatever?
Before the end of April.
Oh, okay. I like the way you did that there. And what do you think it is? Do you think it's individual countries? Do you think it's industries first? Like, what do you think happens?
I think there'll be a couple countries that will negotiate through. They're just kind of caught in the crossfire at this point, but they will come to an agreement pretty quickly with the U.S. And then I think we'll start to see some industries. If the countries there are housed and can't come to some sort of agreement, industries will do it. And that presents a potentially even bigger wrinkle to all of this.
Do you think it'll be big, medium, or small size countries that come to the bargaining table first?
That I don't know. It's a really interesting question because I think a lot of big countries are going to feel like they've got some leverage, especially if we import a lot of their products that we can't replace or don't want to replace, or would be cost prohibitive to replace. Smaller countries may just say, hey, what do we got to lose? So we're way more dependent on some of these dollars than some of the bigger countries that may be able to absorb some of the hits.
Is it fair to say, and again, we talked about this before the show today, is it fair, in your opinion, do you think that the tariffs end before the intended positive results are met?
Yeah, I do, which is, I mean, what's the point at that juncture? We talk, we've said a couple times, 3 to 5 years, and maybe 18 months to start seeing and feeling the changes, but 3 to 5 years for all of that. I don't think the general American public, I'm not picking on sides or political parties at this point, just the general American public has the patience or the appetite to weather that long of tough economic times, to, even if we were to be communicated to that this is the ultimate goal and what we see happening. I don't see it.
We've made it a day and a half.
Yeah.
And people are freaking out. Arguably, we're freaking out. And I would say this. The market thing to me is just I don't want to be rude here. It's a novelty. Like, it's just sort of happening. It's sort of like it's not good. And you know that people who just retired could be in trouble, or people who are about to retire could be in trouble. But beyond that, again, with the glory of time and time horizon, it's the economy that I'm more like, man, we're heading straight for stagflation. Straight for stagflation.
Yeah, I think that's very possible. I mean, especially for a couple of year period. I think the stagflation is, I don't want to say likely, but it's right there knocking at the door.
Okay, so for those that don't know, a stagnant economy, right? So no growth or even recessionary conditions, right? The GDP does not grow, and then inflation is still there. So you've got no growth and you've got inflation. That then it leads to a tremendous number of layoffs, and so it's an unusual condition when those two elements come together, and we're I want to get into we're virtually guaranteed to have a recession. I don't want to get, but we kind of are. I think we already saw in the first quarter GDP growth was 0.3%. Is that right?
Sounds right.
I could be totally wrong in saying that right now, but I think it was 0.3%. And if we're that close, and this is before all the tariffs and everything else, you're toast. We're going to be contracting this quarter, and then the actual recession technically would begin in the third quarter because it would be 2 quarters of negative growth.
Right. Correct.
Anything good going on with you, Dame? Like you win a lottery ticket, or like your hair start growing back, or what?
Forbes found that there are now more billionaires than ever on the planet. Hey, great congrats for them.
Gosh, that's going so well.
Yeah. So there you are. If you had to guess, how many billionaires are on the planet?
Oh, that's a great question. I'm going to embarrass myself. 1,000.
There were 1,000 in 2017.
Oh, okay. How many now?
3,028.
Hey, congrats, all you guys.
Guys, pretty much specifically.
Hey, that's it. Good luck. Sending good vibes, because good vibes are all that's in the budget and all that's in the account. I'm Pete the Planner, and this is the Pete the Planner Show. Boy, an hour. You know what? An hour 11. I think last week was an hour 10.
We came through after that long intro.
I think it's again, you and I were slacking a little bit yesterday, but we haven't talked about this.
No.
And plus, you haven't been able to talk because you've been sick.
Yeah.
When did we talk on Wednesday? You were as bad as I'd ever seen you sick wise. Your recovery to today is remarkable.
Wednesday night was a huge turning point. By the end of the day yesterday, those last couple hours really weren't great, but we'll see how today goes.
Do you think what percent aligned do you think you and I are on this topic? I feel like I've more or less fully represented my perspective, whether you have or not. That's up to you. But like, how aligned do you think we are on this?
I think we're pretty close on this particular thing. Like I said, I think you and I both agree that creating new jobs in America would be wonderful. Being able to be a little bit more self-sufficient would be wonderful. But the expense that we're going to go through and the lack of communication and vision casting that's being done this is just rife for a lot of pain with no real payoff.
The weird thing is, you talk about leadership for a second here. Communication is an important part of leadership, but a vision is also incredibly important. I will note, whether I agree with it or not, President Trump is casting a vision. Like, he has a vision of how he wants this to go.
Mm-hmm.
So there's some element here that I'll say makes sense, but it's like, okay, we're kind of there.
Yeah, but do you think this is how he wanted it to go?
No.
No, boy, of course not. They had to know that this was on the table. I
don't know. That's where I start to feel like, then I don't mind giving an economics opinion, right? I am okay with that. Then I'd be like, oh, I don't want to get into this. But do you think Congress will crack?
How so? Can you give me an idea on what you're talking about?
I'm gonna tread lightly here. I feel like the GOP-controlled Congress is more or less in lockstep with President Trump on most of his policies and executive orders and these things thus far, and arguably understandably. Do you think that starts to crack and you start to see people say, hey, actually Congress is who levies tariffs, and then goes that route?
I think there's a short leash before that happens, because they get elected every 2 years, and if they're not careful, a bunch of them are going to lose their jobs.
I think it's more, my prediction there is, depending on how long this thing lasts, I think that they would start going against him to save their jobs. I think that's when it turns.
Yeah, that's what I'm saying. Is like they will maintain formation for a while. But if they continue to see disappointing results in the news and in the markets, the next election cycle is not that far away for them, and they're going to have to start scrambling to save their gigs.
All right, Dame. Well, this is fun. More than anything, I'm glad you're feeling better because you seemed miserable.
I was, and thank you.
All right. Well, I got an important meeting.
Good for you.
I don't. I'm going to have some lunch. All right, everybody. Love. Sorry about everything. Stay getting money.